Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Jubilant Foodworks. Is it a buy at these levels or an avoid? So let's get started. First of all, disclaimer that this is not a stock recommendation and people taking any position by any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Jubilant Foodworks, here's a small request that kindly uh, support me on Patreon, and once you do that, it will help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up from time to time. And also, if you cannot pay on Patreon, kindly do email me and we can work things out with other payment methods as well. Now about the company, established in 1985, they manufacture a number of food items, primarily various types of pizza, have Domino's as its major brand, ventured into other items like salad and biryani recently by acquiring different firms in these sectors. The market cap of the company is around 38,000 crores. If you look at the numbers, then sales went up by around 13% quarter on quarter in the December quarter, where the profit went up by only 8%. So there was a lot of pressure on the margins, lot of pressure because of raw material cost. And I think it is only going to increase going forward with the higher, you can say, crude prices, because a lot of their business is through delivery. And so crude price hike will have a direct effect on delivery cost, etc. Lower promoter but decent institutional holding, ROE of around 18% and margins of 26% is there, which is strong for the company. If you look at the performance, then stock has been in a downtrend for quite a few months. Actually, it made a top in October last year and have been falling since then. And it has fallen more than 40% from those tops, and is trying to recover, which is not happening at the moment. The stock has also split, but there have been corporate development with the CEO resignation just recently, and the stock fell even more. So this led to even more decline and fall in the stock price. May keep consolidating as news flow is negative for the short term, but I think for the long haul, these are very attractive levels to get into the stock. If you look at the technical, then there's major long-term support around the 520 levels, and the short-term support is around 550 levels. I think it is hovering around those 550, 530 levels. So very interesting levels to probably get into. Looks weak on chart, but may have formed a long-term bottom as I explained. So these are good levels to get into and accumulate. The major upside is expected above 630 levels. Then you will see a real surge in the stock. So it can be accumulated around the current levels. So why I believe it is a buy at these levels, trading at very low valuations on a historic basis, trading at 40, 45 times earnings. Normally it used to trade at 70, 80 times. Yes, because of the resignation of the CEO, people believe that the numbers might not be the same, and it was him who made so much changes in the company that led to Jubilant Foodworks coming back from the ashes in 2013-14. So things recovered and revitalized under his regime, and now things could go back to the same phase as it was before 2013. But I believe that once a system is in place, it is very hard to change that. So once a very good system has come into place in Jubilant, I think things should move along well even with the new CEO. So I think this fall of 40-45% could be taken as an opportunity to buy into the stock. Technically, stock seems like making a bottom, and I don't think negative sentiment will remain forever or for a long period of time. So I believe that all negatives might have been priced in at around 500 rupees level, and new highs is possible over the next 1.5-2 years. That's my analysis. You can do your own analysis and then take a call on the stock. But inflationary pressure is the major negative that will remain with the company for at least 2 quarters. So probably one can accumulate over a 6 months period and then reap the benefits 2 3 years down the line. So, in my opinion, start accumulating at these levels and wait for bad market days to keep building positions. Don't buy on an upsurge, but you will get opportunity when the stock is down 4 5% in a day, and that's when you accumulate the stock. Have a 2 to 3 year time frame, and I think you will get very good returns going forward. India is a consumer centric economy, and there's high young population out there. Have less than 5% exposure into such stocks, but I think going forward, things should only improve for the company. So this is my video on Jubilant Foodworks. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it. Kindly support me on Patreon. Thanks a lot for watching.